Join us as we disrupt the global real estate industry, revolutionizing the future of property investment and ownership.
The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, which makes it the same in UTC. Really big shout out to everybody joining the stream live today. Really have got a lot of people tuning in today, which is awesome to see. Who was first in this morning? Nick, getting back on the horse again. Nick, first one into the live show today. Well done, mate. Good to see you there. Stevie boy, wonderful to have you here. Erica as well. Miguel Sanchez, welcome. Hemsworth, Steak and Wine. Good morning from Bermuda. I love everything about that name, and I love the sound of Bermuda as well. Craig, hello, mate. How you doing? Trader Mum Joe, brilliant to see you on here as well. Loretto Jr., brilliant to have you on the stream, mate. Very much welcome. Whack, my friend, how are we doing? Also to everybody else as well. Julian, I see you in there as well. Really, really good to have you all on here today. And McRaw, brilliant to have you there as well, guys. So today I just wanted to kind of go over a little bit of kind of like a higher time frame view for you guys. All right, I know we've been focusing a lot on daily liquidity and kind of how to trade. While Bitcoin especially has kind of been consolidating in this range for a while. So if you do have any particular questions, do let me know. I just want to do a quick run through for you. We're going to look at a few other assets as well, look at some traditional markets too. Matthew, good morning to you as well, mate. Link killing it today. It is absolutely flying off. Maybe let's add that to our list and let's see if there are any kind of telltale signs that Link was giving us other than the fact of its kind of overall performance of strength in the market. So if you've got any questions, guys, please do pop them in the chat. Always try and get around to them as well. And we're going to kind of have a little bit of a focus on education here. But if you do have anything specific, do let me know and I'll always try and cover it off for you as well. Projar, hello, mate. Welcome. So look, my view on this at the moment, I know it looks like a big, bright, colorful chart, right? So we're on our weekly time frame at the moment. The key thing for me here is this box, right? We've got this balanced price range, which is when a bullish fair value gap, we see this gap here, this gap closes below this one. And you see how they overlap? These are often really, really key areas for price, right? In the same way that we use our fair value gap inversions to tell us when price is, you know, showing strength or weakness. To give an example of that, we can see down here with this weekly fair value gap that we had, right? Rejection from price, rejection from price. When we closed above it, yeah, we can see how price then started to look for liquidity higher. That's what the principle of how I look at the market certainly is. What's capping the market? Where is price reaching for? And where's it delivering from? Yeah. So, for example, for a bullish trade, we want to see a bullish state of delivery. So, whilst when we had this move here, this fair value gap before we inverted it, yeah, we can still tell that it's a draw on price. And as soon as we look left on the chart, we can see that underlying it all, and I'll do this in green so it stands out. We have this gap here, right? Price found support here, pushed higher to take out this high. When it then came back below this low, think of it as into clean new territory for it to find bullish support. The principle we have is quite simple. We either find support here, or if we violate it by closing below it, we would turn that into an inverse fair value gap, right? Which you'll see on my charts as like a darker purple. And then ultimately we would look for liquidity targets lower, starting with this one, right? Because that's the clean and obvious low. However, we didn't get that. What happened was price ultimately respected that. And that's what allowed us to kind of maintain a bullish bias. First of all, bearing in mind this is a weekly scale, guys. When we're down in here, we've set this order block. We're using what we believe price is drawing to. And in my opinion, price draws to one of two things. One being old highs and old lows, yeah, including equal highs and equal lows, which for me are even more high probability. Or price is looking to rebalance an inefficiency in the market, and that's why we look for our gaps. I'm also looking at key kind of areas of support and resistance, the way that that would be looking across. And let's just have a look. Just a couple of questions coming in. Morning, Gio. Hello, mate. Great to see you. Hemsworth Steak and Wine. I'll have to take a look at that, actually. Yakuza Carter, brilliant to see you on here as well. And Pointer, hey, could you have a look at Link? Yeah, Link seems to be a really popular one at the moment. So let's just have a quick run through BCC, just so I can give you my kind of high time frame thinking on this. At the moment, basically, as we sit, we're kind of caught in this balanced price range, right? Now, when price gets caught in this kind of area, then you typically see a range form. This is quite common after you have, you know, a large amount of expansion, which obviously we've had from here. We also formed our inside bar range, okay, which is the combination of these two candles here, right? So this forms our range. We can see price got support within this fair value gap when it got back in the range. Our theory is that price heads for liquidity on the far side of the range. If I just turn our weekly thoughts off for a moment and we just focus on that, we can see we've got quite a nice range here, right? What price tends to do is when we see deviations, yeah, like we do here, then we're targeting the opposite side of the range. Let me just do that in something that's a little bit better than that. Right, what we're doing is we're ultimately targeting the opposite side of the range because there's liquidity resting there, right? And that's what we want to play. So I know it doesn't look like you're going to get much on this, but if we just keep those on there as ugly as they're going to look, and we drop down to, say, a 4-hour chart. Let me just turn the session breaks off for a second. Look, and then we can see here, and especially with a move like this, we get a really sharp move below our liquidity, right? Then we're asking ourselves the question of, okay, what's price going to continue to do here? We see we're setting lower lows and lower highs, right? That means for me, when we come down and we have this purge, this move below, I want to find short setups in here if we're going to hold this, right? The minute that price shows strength and it breaks structure coming back into the range, which it does here, all right, just do that in a slightly thicker line here for you guys so it stands out more. Yeah, so we see here that price kind of breaks structure and starts heading back into the range. That means on a lower time frame, we can start looking for lower time frame setups. Even if we're looking at this big expansion here and people will say, yeah, but price has kind of gone too far. Well, typically when we're looking for key areas of liquidity, so we've got these equal highs here. All right, and obviously this intermediate term high here, which is just the simplest way to think about this is looking for a high or a low that's within a fair value gap. They tend to be really, really good liquidity pools, right? So even when we step back into the range here, we still have all of this level to day trade, right? So even by this time this candle closes up to here, you've still got to the lowest point, you've got 1.5%, to the highest point, you've got 2.3. That's more than enough to day trade, okay? Now, I appreciate some of you aren't day traders, you're looking at this much more from a swing perspective. However, if you're doing that, then it's all about the conviction of your play, right? So, for example, if you were stepping in based on market structure here, you would have your break. Even if you got your entry up here, you know where your invalidation is because it's the swing low that exists under here. There's no reason for price to come down to that, right? Why would price be showing weakness here if it's stepped back into our range? If this was going to show weakness, then our expectation would be for price to set this low, to come back out, violate that low again, and then we would simply be zooming out to a point that we're then looking for the clear and obvious liquidity, right? We can see these untapped lows sitting over here, right? These are great liquidity pools for price, all right? So what we're doing is we're simulating a theory and then we're looking to execute on that, typically based on market structure, okay? Now, one thing I just wanted to show you quickly, just let me delete this, is just the kind of daily thoughts that I shared on Twitter last night, because I know I got a lot of questions about that, which is really, really cool. So let me just get up our daily inside bar, and then we're going to go to a day. Okay, now I know this all looks a little bit messy, so let's get it zoomed right in. Right, now all we've got here is, sorry, our 4-hour inside bar, that should be. All we've got here is the same principle overlaid on a lower time frame, right? So we can see once again, this Let me just get rid of that for a second. This formulates our mother bar. So the inside bar pattern, for anybody that doesn't know, you can find it on my Twitter page. It's pinned at the top of the profile. When price starts to consolidate, price spends most of its time in ranges, right? These are some of the easiest ranges that you can find, okay? So what you're looking for a prominent candle like we got with this one, with the second candle, the one next to it, closing within its high and within its low. So within the range of the first candle. That then gives us two ranges, our mother bar range, which is the high and low of the first candle, and the inside bar range, which is the high and low of the second candle. And all we're looking for in principle of this is the same. That means when price attacks the highs, if we fail to close above and progress with market structure, when we close back below, like in here, we then target the far side of the range via the EQ. So from here, we were short to here. When we held this level, we don't take plays from the midline until we get confirmation. We then break down from here, yeah, but come back above. Then we shift market structure here. So we trade it down to the lows. We did the same thing here. And we've done the same thing where we've deviated the lows from here, getting caught once again at the midline. So this really is just a really good indication of how you can just see price moving from level to level, all right? It's not always super clean. If we look down here, we can see that we had this breakdown, price broke structure, ultimately didn't reach for our lower liquidity down here, all right? Now, I'm somebody that uses kill zones, all right, which is an ICT concept, meaning that we're targeting specific times of the day to cover the New York and London trading sessions when we have the highest volume in the market, okay, which means that we're most likely to see good volatility and certainly good price movement. However, if you're not somebody that trades by those principles, then, you know, they're obviously nothing in trading is set in stone. It's all about how we see the market. So before I blither on anymore, you know, I made it really, really clear with this that my bias at the moment is bullish. Okay, so look, really simple for me. Once we step back inside here, we're at the midline here, we're above the midline. We're now at the inside bar high, which is ultimately for people that think of it in terms of support and resistance. Yeah. So what I'd like to see for continuation here is for price to close above this. All right. In which case, then my expectation is for price to ultimately reach for the mother bar high here via this high, which was the prior swing high. All right. Quick question here. Got a couple of quick questions, actually. BC, with a range, if there's more than one mother and inside bar, which one would you take the range from? Really good question. So what I do is I try and find kind of like the origin of the range. So what Steve is asking here, for example, is the fact that we can see within this range, we have another, I'll just do this super thick so it stands out, right? We have this other inside bar range here, yeah? So for me, I'm keeping my precedent to the master range here, because you see how this is within the other range, yeah? Now, if we'd broken out and formed another one down here somewhere, then I would move over to that one once we're no longer respecting the parameters of the original range. But while we're still within its confines or in and around it, I'll always keep referring to this because I don't know until I get a fresh one down here, right? Let's look at this one, for example. I still need to show a little bit of patience down here because ultimately what price is doing is it's moving back into the other range, yeah? Now, deviate this and climb back into here, then all of a sudden I've got a little bit more confidence, right, that this is the range that's being respected. But until we kind of make our play back into this, then I'm still always giving my favor to the previous range or what I would call the master range. So let me just rename that. Stupidly called that the daily inside bar, and it's not, it's the H4. Perfect. Right. So we also had a question here from Nit as well. Is it a good idea to use fair value gaps and order blocks with inside the inside bars, but on a lower time frame? Yeah, absolutely. So, for example, if you were using this here and I would trade this on, you know, because it's a 4-hour inside bar, I'd be looking at this on more of the minute charts, right? So if we just look for what, okay, we'll just take any example, right? Let's take this one. So we see here that we ultimately get price come down and we get a run of the low. Now, something that I think was something certainly makes a big difference to my trading is looking at how price is moving. So if our expectation is for price to be grinding down here, we can see here, right, that this is just a bit of a grind, lower lows, lower highs, but then we get this sharp drop, right? So there would be an expectation that price would just kind of continue to grind down lower if that's what it was going to do. However, we've run this key liquidity level, right, which is our inside bar low. And then we're kind of saying to ourselves, okay, well, what would we need to see here in order for this to be a reversal? Now, we can look back along this line here and see if we've got any fair value gaps, right? And what we notice is we've got this bullish fair value gap here. It's already supported price once, and we've got a little gap, if you can see that, underneath that red line. I'm not really interested in areas of a fair value gap that's been filled. I'm looking for new space within it, all right? So as we draw this forward, and we're saying, okay, we've got this, and we want to see price, see how price reacts here. Well, we can see that it drives into what we would call like the, the empty space, the void, or the, the naked space, for want of a better term, meaning that a strong reaction here can be really, really powerful, right? So what do I want to see in order to confirm that? Well, I really like using inversions, like fair value gap inversions. Why? Because when price is in a downtrend, it should be respecting these, yeah? But ultimately, when price is going to break that trend, then you're saying, okay, well, where's it reaching for? Where's the next liquidity? And we have a few points here. We've got these kind of highs. I like this because it's an intermediate term high, right? Remember, that's a high or a low that's within a fair value gap. So obviously, intermediate term high within a high within a fair value gap, intermediate term low, a low that's within a fair value gap. So where I've got that as a pre-made target and my range EQ, all of a sudden, and okay, this doesn't give us the best chance in the world because we see such an aggressive expansion here. But if we were using that, we could put our stops underneath the body of this candle, because this candle's close confirms this as an order block, right? And then we would just know that basically there's a chance that if we don't reclaim this midline, yeah, but look how price kind of gives us the indication that it's willing. Strong close above. And when you hear me say that, look at the bodies here, bang, bang, big bodied candles. Then what happens from there, right? We can mitigate the risk and move our stops to entry. We haven't quite got a 1-for-1 there, which isn't something I like, right? But what we can then see from here is that we're delivering again from a bullish fair value gap. These will be grey when you see these on my charts, by the way, guys. I'm just doing them on here in terms of showing you just so it's cleaner. Prakoshi, not at all. Good to have you, mate. So then when we react from this here, it doesn't really give us any reason to kind of to get out of this trade, right? If we've done that and we've already moved our stop loss to entry here, yeah, because we've got the conviction, we can see we reclaim our midline. Well, all of a sudden, then we're looking and saying, okay, well, the next key liquidity is up here, right? But we're also going to be conscious as we look across here. So look what we've got here. We've got intermediate term high here, for example, yeah? So we can then take this, our intermediate term high over here, and say, okay, well, maybe we can look to move our stops up when we get there, right? Or when we stop respecting these fair value gaps, right? But we can see here, right? Look, price still respecting this one. Even when we break out of this one's range, which is fine, look, support, 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 right? So we hold this until we get to our key liquidity target. And that key liquidity target is always best if we set that on a higher time frame, right? Because it gives us the conviction to hold. So where we have the conviction to hold to this line, yeah, because we know that's our inside bar high, well, when we're down on a 2-minute chart, that conviction gets a little bit trickier when you're looking left and you see all of these highs everywhere, right? So it can just help sometimes to have that. And if you're somebody that's risk averse like I am, then, you can implement a system where you move your stops up pretty quickly. So just a quick question here. The large expansion created a bullish fair value gap but never got tested. Yeah, so sometimes, and that's more of kind of like a retrace model. If you see these, for example, and often when you see these retests, Nick, then when you see a high or a low broken, you see we got this big expansion here, we got this fair value gap. These can often be what are known as breakaway gaps that don't get retested immediately. And quite often it's when we fail to break structure, right? So with our intermediate term high, that's actually our shift in structure as well. We've now gone from setting lower lows and lower highs to setting a higher high. And what you notice here is that then when we draw into this, yeah, this is where we then find support. So for certain models, say for like a 2022 model, which is based on breaking a high with momentum, taking your entry in the fair value gap, and then putting your risk at the nearest swing low, which actually I think very minusculely is this one here, right? What you would do is you would then be taking your entry on the fair value gap, stops below the low, and then you'd be targeting the high up here. But you're absolutely right. Sometimes with these, you do get those big breakaway gaps, which is why when I see price initially run liquidity, I quite like using the inversion setups. All right, Taron Feathers, hello mate, good to see you on the stream. So let's get everything off our chart for Link, shall we? Or we'll take a look to see what we've got on there from previous, yeah. And then let's just take a look and say to ourselves, okay, let's do a clean top down, see where we sit with Link. Very welcome, Nick. Very welcome indeed, mate. So again, right, I think if we zoom out to a weekly scale here, right, let me just try and bundle all that together. There's loads of old data here on Link. So November was, there we go. Right, so weekly, right? Look at this really nice clean high we've got here. So we always want to be aware of where our high time frame highs and lows are, as well as obviously our, because look, this is a really good example actually, how we're kind of similar situation to Bitcoin, where we have this balanced price range. Price isn't as clean on this. It is a much more liquid asset, obviously. But when we closed above this here, my expectation would be for price to move towards the next swing high. Unfortunately for us, when it closed above, it had already taken out that high. Yeah. So then we've got a very similar situation here as well. We've seen this really big expansion through this area, and now we've kind of taken out this high. So there's a couple of things to remember, right? And let's draw this one in as well. And why do we like this one? Because this one's an intermediate term high, right? So we expect some kind of reaction here. What we want to see from a high or a low is, let's take a look at this high here. And then let's look at the difference between that high and this high, right? Just for a second. So when price came into this high, look at the long upside wick, right? That's showing absorption. That's showing that price is ultimately not comfortable at that level. And it's going to do one of two things. If price takes external liquidity, which is an old high or an old low, and then we fail to displace above it, right? Then our expectation is for price to come and find support in a fair value gap, all right? Which we can see we found here. A bit darker for you guys. So price took external liquidity here, came down to internal liquidity, found support. You see how we didn't close below it, so we have to remain bullish. Price then came up and found external liquidity in the form of this high. Now, what's interesting here is look at the difference from this sweep to this sweep. You see we failed to close above. Price had a weak reaction at both, right? Especially this one. This candle tells you so much here. So let's just delete that for a second. This candle here, see how it closes as a doji, telling us there's indecision in the market. We've swept this high, we've closed back below it. Our expectation is for price to go lower, right? Now, when we sweep this high, let me just get rid of that for a second. This candle really screams that we're going lower, right? And there's a couple of areas we'd highlight straight away, relative equal lows down here and the swing low. Because look at what happened. Price came up and then we had that really ugly close. Right, price tried to get to here, but was forced all the way back down to here, meaning that the sellers really, the strength of selling pressure is what played out there. Price then ultimately was reaching down for our target down here in the fair value gap. Now it's moving higher. So the difference with this high is that as we've closed above it here, yeah, we've swept this main high as well, prior swing high, then we can expect price to move higher to here, right? So it makes sense for us to be bullish this week, because we've closed above this, and look at all the volume in this. So the bodies of the candles, and it was SZ who taught me this, right? You know, a few things, right? One is that small body candles lead to big body candles. Yeah, so you see when price starts to consolidate around here, yeah, a bit of indecision, and then bang, we can play that strength. We can jump on the back of that as long as we know where our high time frame targets are. But also as well that the volume of the trading, you know, who's winning that battle between the bears and the bulls is within the body of the candle, right? The wicks only show you where prices tried to reach to. Bodies tell you where it was successful. So when you look at the body of this candle, not very bullish, right? When you look at the body of this candle, not very bullish. Small body candles. This big expansion here, right? These big candles are often followed by a continuation in trend. But we still just need to know where our targets are, because ultimately what we're doing at the moment is we are delivering from a weekly bearish fair value gap where we have our intermediate term high. So we expect some kind of reaction here. What we would want to see on a weekly basis is, as we did here with this high, is for price to close above it, in which case we would then expect continuation. What we then do is we then move down through the time frames, right? So you can do something like you can get these indicators like month, week breaks, for example, all free available on TradingView. So it shows you, look, this was last week. So our expectation this week was for price to go to this high, which I'll draw across a bit more here. And now we can see that ultimately, Asia and London have kind of robbed us of that opportunity if we were waiting for it in New York, right? Because we're basically on today's trading. However, we're still looking for indications. And what we have here, remember, look, we're targeting this until today, right? Our conviction is that price is going for liquidity above here. That's the key, is the conviction. So I'm looking for reasons here to be bullish. And my first one is after this daily here, Saturday's candle, Sunday's candle gave us a change in state of delivery, which means that it triggered this order block. Now, it's got a small body, so it's slightly less, high probability, right, because of the body size. But ultimately, look what we've done. We've set a bearish candle. We've had a nice bullish expansion over it. So as we step into the charts this morning, then we can say, okay, well, look, our target's here. So how does that look as we decant down the time frames? We move to our 4-hour chart. And what do we want to see? We need to see a reason. We need to see a reason as to why we can push higher, where we can do that from. So remember, our theory is that we're looking for these gaps for price to fill, or we're looking for our changes in state of delivery, right, which we get here. But ultimately, as we break this down further, we've got these equal highs resting here, and they just become just these most amazing liquidity targets. So can you see how just by telling ourselves the story and looking through the time frames, we've got the area that we believe price is kind of drawing towards. We're then using the lower time frames to find areas that we can get involved in the trade, and then we're saying to ourselves, okay, well, what happened here? BC's always banging on about, external liquidity, blah, 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 to internal. But we can see that relevant here. We took this higher. We came down to this order block. Our expectation from here is price to draw higher. Here's our most obvious liquidity target. But we don't want to forget our high time frame and say to ourselves, look, we ultimately believe price is drawing to here. So when price comes into here, we get an opportunity to go long in here. This would have been in Asia, so before mine, right? Or we get this opportunity here at the start of London, because now if I drop down to, say, a 5-minute chart, and I'm looking at the start of London, and people say, but why would you take a trade here when you've got the high here? Look, when price comes so close to taking a high time frame level like this, and then comes back down, then I'm just immediately looking for an opportunity to enter, right? And all I want to see is some kind of engagement of liquidity, right? So like we've got here, we can see we get a low swept, right? Then we can look for a change in like this, a change in market structure. We're within our London trading session. What have we got? Prices pushing lower here. What happens? We get a move. We get a close above here with displacement in here, right? Meaning that we can do a number of different things, right? I like using this method where this becomes what I used to call a breaker line. Don't really use that term as much anymore, purely because of obviously the idea and principles around breaker blocks. But when we close here, we're changing how price is delivering, right? It's gone from being bearish to being bullish. So we close there. We can put a limit order on here. We wait for price to come down. We put our stop loss below the price swing low. And we have an intermediate target of here, right? When we get to the internal high here, we can move our stop loss to entry and we can mitigate the risk on our trade. So why, when we were looking at this on like a 4-hour chart, right? It doesn't really look like you've got any room at all to move. We stepped into London here. This stopped, Asia just stopped just short of this. But as long as we've got conviction in our high time frame targets, it allows us to that conviction in terms of the entries. Okay. So does that make sense, guys? How we always need to remind ourselves to zoom out and think, institutions, major players in this game, hedge funds, any kind of major financial group, they're not really going to be trading these things on really low time frames, right? They're going to be position trading these assets in portfolios. So the higher time frame always gives us our really, really kind of key look. Now, in terms of where we go from here, when we zoom out again, let's not forget, weekly scale, we're delivering from a bearish fair value gap here, but price is ultimately bullish, yeah? But we've taken this liquidity target here. So we want to drop down to a daily and say, okay, price is running really hot at the moment. If we're not in a trade right now, probably doesn't really make sense to step into one at the moment, right? What we would do, we would say to ourselves, okay, well, let's zoom back on a daily and let's see what we're dealing with here. So we have this real fast down move here, right? Leaving fair value gaps. So price could very well be drawing up into these fair value gaps, all right? We can see that we've got the top of one here, right? So we haven't quite filled this one yet, and we've got one sat just above it. Let me zoom in a little bit for you. Now, quite often, when you see these very fast down moves, when price gets back there, it can often retrace the same way, okay? So, for example, big fast down move, big move back up, yeah? You see how price quickly expanded here, ultimately dropped back down again. You see these V-shape recoveries and reversals in the market all the time. Now, we don't know if price is ultimately just going to have a quick reaction down and then back up. But for me, I would be thinking, look, I would want to, on a daily scale, see price close above this quite convincingly to think about higher prices. Or I'm looking on here and saying, okay, well, if we do correct lower, and we've taken external liquidity, then this is my internal target, right? This is my fair value gap on a daily scale. So that's where my belief is that price can come back to. Just move that out of the way. Now, if we're then going to take that down further and we're going to move down to our 4 hour let's have a look, almost 3.5 hours from now, if price closes here and we leave this gap, right, then what we would do is when price returns in here, we need to see what price is going to do, right? Do we get a low time frame setup that allows us to go bullish like we did when we looked at market structure? Or do we close below this? And if we close below this, all of a sudden, then all we have to ask ourselves is, where's our next key liquidity? Which ultimately is resting down here. So close below this, if we haven't set this yet, right? But close below this, price is showing weakness, it probably looks to correct a bit deeper, right? Hold this, and within this box here on a lower time frame, create something like this, right? Remember, like we did last time, what we want to see is you want to see price sweeping liquidity, right? So it's inducing. Then we want to see price shift structure, right? And then we can either continue this line along here, which then becomes our breaker line, right? Meaning that then when price closes above here, we set our limit order on that line, we wait for price to retrace to it, our stops below the price, swing low, and our target is then our high time frame target, yeah? What we want is a clear point of invalidation, which is what we get below there, okay? So there's no setup at the moment. Link on that one. We haven't set that 4 hour fair value gap. We've had a large bullish expansion taking out a high time frame level. For me, I'm looking at this from a more cautious perspective. Okay. Ultimately, if I'm really, really desperate to get involved in this, and I'd recommend that if you're ever really, really desperate, just make sure you're even looking for more confidence, right? Because as human beings, we're very, very good at convincing ourselves to fit our own narrative, or self-fulfilling prophecies. So look, if we expect bullish continuation, this is our next gap here. If we run this high time frame high and price is now going to correct, we've taken external liquidity. If our expectation is for price to come down, take internal liquidity and then move higher, this is the first place that we do it. If we close below this, this becomes a fair value gap inversion, meaning it's showing weakness, meaning that we're then looking for where price is then drawing to, which would be this, all right, which is our next bullish fair value gap. So it might be the case that price inverts this. So we're patient, yeah, or we're trying to scalp shorts down to this area. But that later on in our New York session in here, we find that long setup. Yeah, price comes into this level. We come in, we sweep a low, we recover it. Yeah, we change structure, ultimately get our entry in here on the retest, and then we look to trade it higher. Okay, just like the much better diagram that I drew out previously. Okay, so that's where I am with Link at the moment. And obviously, not everything is completely correlated to Bitcoin and its movements, but Bitcoin does help. At the moment, Bitcoin's having a nice kind of move higher. We can see that ETH is having a move higher as well. Yeah, sure. Well, absolutely. Let's run onto ARB as well. And as we look at Bitcoin, though, we can see, look, ETH's starting to cool off at the moment. Bitcoin's doing similar. It's our inside bar high, so it's our range high. We've also taken liquidity above there, right? So it makes sense that price can kind of have a breather here and come back. Where to? I would probably say, looking at this purely on an hourly scale, and what I would do is I would mark this, right, which is our order block, although it's, you know, not a massively high probability one because it's a very small body. However, it was the one that caused the change in state of delivery. And we can also kind of move down and be a little bit more granular. Now, I wouldn't take this personally because it's outside of my kill zone, right? Meaning that it's not an area I'm looking to execute the trade. But as we break this down, and if we want to strip away all of the noise and just really kind of focus, as I was saying to you guys before, about looking at where price is delivering from, we stepped into our session today with a bullish bias, right? So from the start of our London session here, it's our job to find the key areas at which price can give us an entry, right? So this was our high time frame target. Yeah, we've got this line up here. Now, let me put my session breaks back on because I want to just show you how you would break this down on a daily time frame as well, right? So key areas of liquidity. Here we have the prior day's high. This for me is always a really, really key target. The high of day, the low of day, the prior day's high and the prior day's low, right? So within London here, we're asking ourselves, all right, are we getting a setup? So when price comes back to here, this is 7 o'clock in the morning. The first thing I'm doing is I'm saying, okay, my expectation is for bullish price delivery here because we believe price is being drawn higher towards our high time frame targets. So I want proof, right? So before we stepped into the session, price has come up, right? And what have we done? We've delivered from a fair value gap. Now we've come up and we've taken external liquidity in the form of this high, right? Our high time frame targets don't change. Now, once we're away from this, that's fine. We can come back to that later if we need it. However, now I want the conviction to say, okay, well, you know, where's price delivering from now? So I'm moving out again to an hourly. I don't have anything clear on the hourly, but what I do have, and this is why it's important to always zoom out, is here we have an inversion fair value gap, meaning that 5 o'clock in the morning, when this came around at 6 o'clock, we closed above it, meaning that our expectation for bullish price action again has an extra point of confluence, okay? The reason I moved to the 15 minutes is because I didn't have the granularity to look for an entry, right? I'm talking about finding something here at the start of our London session. So I want to look for these fair value gaps. And the first one that I've got is here. Okay. So 7 o'clock kicks in here. What do I have? I've got an immediate high above me here. Yeah. We've got these highs here, and we've also got this one here. And my focus is going to be on this one here, just because that's simply just the cleanest high above here, right? See how that's quite prominent. This and then this led to this big drop off. So if we were then looking to decant this down onto a lower time frame, yeah, you don't have to go as low as, say, like a 1 minute. But what you're looking for here is you're looking for a reason to get involved in price action. You want to see these holding. If price drops lower, you want to see weakness turn to strength to ultimately come and attack our high time frame levels. Now, dropping down to the 1 minute on Bitcoin can be quite treacherous, right? Because ultimately, there's a lot of noise, right? So let's just, okay. So we're very, very close to this here. But what I really like about this setup is two things. One, if we're now looking, remember, we're just watching here patiently for price to deliver from a bullish fair value gap, which we get here. Then we want a sign that price is going to deliver a strength. So here's our market structure shift. If we're using a shift in structure model, right? If we're using an inversion model, then here's our inversion. Although I'd make an allowance for this higher one as well, because there's one directly above it. So an inversion model, we would be looking to take an entry around about here. We'd want to chase this up to this high, also being aware here where we would probably be looking to move our stops to entry. Our stops would go below here because this is the order block, right? However, what we can see here, and this is such an important part of trading, is that we have like a 0.89 risk to reward, meaning we're risking more than we've got reward for, and we have to factor in fees. All right. Now, when we've broken this high, we've done something else, right? We created this gap here. I'll do this in green just to show this as a bullish fair value gap, right? Now, ultimately, this is basically on the very same line, yeah? So again, we're facing the same risk to reward. So for me, it would not make sense to enter this trade regardless of the fact that it's a winner, right? Because I'd want this to be better than a 0.89 risk. But can you see, and I wanted to put it on replay there because it's very hard to kind of cherry pick this stuff really when you're going onto the minute chart. But can you see how we just decant that from a higher time frame onto a lower time frame, right? So if I just take this off of replay for a second, in terms of plays and setups that we would be looking for on Link today, well, as we move into our New York trading session, which is our New York AM session, which starts at 13:30 UTC, if that was happening right now, for example, I'm saying to myself, well, okay, we've taken out prior day's high, fine. We've taken out a key high time frame liquidity target here. If I'm looking back, I'm looking for where the other key liquidity is resting. Yeah. So we've got this, which was the high of day from Saturday. If I'm looking at that and I'm saying, okay, well, if I want to get a bullish setup within here, well, we're delivering from this bullish fair value gap. If I move to a lower time frame, can anything else give me some confluence here, right? And like I said to you before, there's a number of different ways that you can look at this, but I'd be looking at this from perspective of this. And again, not right now. For me, it's not within my kill zone, right? But if price was to close above here, then ultimately I've got a high time frame target here. I know where I'm wrong, yeah, because I'm wrong under here. I'd like to see price close a bit higher and confirm the order block, but then it obviously does really take out our risk to reward as well. And, you know, as a risk averse trader, what I'm looking to do is say to myself, okay, well, if we get to this interim high here, yeah, so let's say we get our entry here, even better, maybe a bit lower, and price kind of, you know, works this way up ultimately to here. That's where I'm going to move my stop loss to entry and completely de-risk the trade. And ultimately, if I'm wrong, price comes down and closes below, then price comes down and closes below. For me at the moment, this is too low probability based on the fact that we're outside of a kill zone, right? But we'll keep that on there and we'll take a look at that towards the end of the show. Now, Steve asked if we can take a look at ARB, and we absolutely can, my friend. It'd be a good opportunity to do a top down. Let me just take a quick sip of tea. Nick, okay, mate. I couldn't get that Josh Yu kill zones indicator to display. Okay, mate. Well, just quickly while we're on here, let's just take a quick look at that because I really, really like that indicator. I have one that, loads of you hear me rattle on about it all the time. A chap called Dr. Fuse built, which I really, really love. He was very kind to give me an early version of that, which is what these dots are down here. But and I love his stuff as well. And you can buy it. It's really cheap as well for like a lifetime access. He'd make some brilliant indicators. So if we take a look at this one here, which is this kill zones by Josh Yu, triple U, I think this is a really, really good indicator, right? Now, for me, it does everything automatically. So daylight savings, everything. It just adjusts it so that the kill zones always seem to be accurate. So, for example, London kill zone this morning, yeah, which is 7 a.m. until 10 a.m. Those of you that know certain systems I trade my kill zones, I extend them by an hour. For certain systems, for others, I respect the traditional kill zone times. And then we can see here the same, right? New York PM, which is 6:30 through till 9 o'clock, and I run it till 10. And then this one here. So I don't know. Jurek, you're very welcome, my friend. That's a big, big compliment. And yeah, sometimes I like how British I am. Other times I really, really hate it. Try and be more culturally aware than most British people, that's for sure. So what is it you're having a problem with, Nit? I'm doing something daft. My trading view set up differently. Well, let's just have a look at the settings quickly, mate. If we go on there, first thing I always check is your visibility settings. Yeah. So I'm not trying to teach you to suck eggs, but you've got minutes, hours, days. Like on this, it doesn't matter anyway, because there's an option on here that, let me have a look. It stops it showing it on the daily time frame anyway, which is actually really, really handy. You can also with this one as well, guys, you know, you can put a vertical line at the daily open, show midnight opening price as well, which is a really, really cool feature. for anybody that trades kind of ICT principles. But I would maybe also check that you've not got anything on your style turned off, like boxes or lines. Yeah, because that can really often, or either of these, because these, if I turn these off, for example, see how it just disappears? If I turn lines off, then the lines are gone. Oh, Christ, is QBS in the chat? So, yeah, so basically we can see that in here, right? So maybe it might be one of those. That's what I'd take a look at. Yeah, apart from that, maybe the case of just removing it and then re-adding it. Yeah. Look at Erica's love for QBS. Sometimes I swear that Erica just attends this show just in case QBS jumps on. What do you reckon, Gio? Oh, good Lord. Right. Okay. Best behavior, everyone. Right. So look, this is a really interesting point. So if we were looking at this within a kill zone here, remember, this is our long setup, right? We've entered it based on the fact on the candle close, which actually would be there. So it'd be an even worse risk to reward to here. We would look to move our stop loss to entry here. We would expect fast expansion here because it's not really anywhere else that price can reverse, right? Now, I'm not saying that this won't work here. The whole principle of it is that it will, because we've done our analysis. We know where price is moving from. You know, we've got this bullish box here, which is our gap. But for me, being outside of a kill zone just doesn't guarantee that you have that, volume and momentum there. So, Nick, yeah, I hope that works, mate. If not, like I say, and I think these guys are often really infinitely contactable on there. So I love how that's probably a good move to be on the fence there, actually. And it was cheeky, Erica. You're right, it was. But let's take a look at ARB, right? Let's just pop that off for a second. So if we're looking at our daily scale, right, on ARB, and we can see previously, these are just really key points of liquidity that we're looking at and that we're targeting, right? Let me just get rid of that. So the first thing that stands out to me, I'm always kind of looking, where's price delivering from? What's the bias based on the daily time frame, right? Now, again, I know I, bang on about this and it probably bores you to tears, but when price takes internal liquidity here in form of this, then my expectation is that price is looking for liquidity below an old low. Why? Because this is a bearish fair value gap, right? Now, remember, really simply, if we came above bullishly and we closed above that, then I'd be looking for price to move for this. And for everybody that remembers, because it's in a fair value gap, this higher is an intermediate term higher. So that's what we'd be looking for. However, it doesn't mean that we can't trade long setups to this, yeah? Because if that, we think that that's our draw going up. So ultimately, we've rebalanced this fair value gap. I would have had an expectation that price would have been moving towards this low, yeah? So as price opened up today, I would have been looking for bearish continuation lower. Yeah, we've had a nice bullish reaction to start the day, which is fine. And what I'm going to do is then I'm going to move this down to a 4 hour. And I'm saying to myself, okay, on a 4 hour, where would be the key point that I would look for price to reject here? I've not got a fair value gap, right? I've not really got anything. Order blocks, I can kind of take or leave, really. I typically use them as a point of confluence rather than, looking at them as a point of delivery. And I will miss certain trades because of that, but for me, it keeps it a lot cleaner. So now I can't find anything clear and obvious. And remember that, not in a way that I'm trying to impose that on you, but for me, it's an important factor. If we're looking for clear and obvious, meaning you want these things to really stand out, yeah? So for this, for example, I'm bearish today, and I step into my London session and I say, right, I'm looking for short setups. Where's the most obvious place for that to happen? From here, yeah? So remember what I said to you when we were looking back at this on a higher time frame. If I'm looking for a bearish reaction here as we step in, well, London, our 7 o'clock candle closes above it. And then what did I say from there? From there, we are then looking for the next point of liquidity. And we've got liquidity resting there. We have this high here as well. Ultimately got this high here as well. All right. So what we're then saying to ourselves is, or what I'm saying to myself, so is price has closed above this here. Where's the next place it can find liquidity? This high. Yeah. So that's what we're going for. We're going to do this one in red. And I'm going to say, okay, well, my high time frame bias still might be correct, right? We still might be going lower. Because price could come back. Oh, help if I did that in the right thing. Price could still come back to retest this and then move down there, right? We don't know that yet. So all we can do is play it in a way level to level. Yeah. So while we're in here on the hourly, we've closed above this. So we've also set this order block in doing so and changed our state of delivery, meaning that after the close of this candle, I'm looking to chase a trade into this liquidity. Once I get here, do I expect this thing to moon? Absolutely not. I want to be very risk averse when I get to that point. So here's our arrow. Do we get an opportunity to enter? So here's our first bite of the cherry. And actually, we're above this here, right? So what we want to see is really nice. We want to see a sweep of liquidity, which we get from that low. And then, as we said, if we're looking for this in terms of a break of structure, we want to see a close above here, right? For this to become our breaker line. We get a little marginal close here, meaning that our entry would be here after this. Or actually, do you know what? Actually, I don't think price really comes back down to retest that. It doesn't. Just gaps above it. So no entry, fine. You know, we would have got a reasonable trade out of that. Stops underneath the OB, certainly been break even. Now what it's really important to do is before we then re-enter, we don't want to just chase it from the middle of nowhere, right? We've now missed this part of the move. Price ultimately took that local higher and it's now drawn down, yeah? So now we're saying, okay, well, where are we then looking for? Well, what we want to do is we then want more conviction as to why price is going to move. We've got a clear and obvious fair value gap here, right? So price draws down into here. Then we see a bullish reaction here, meaning that we invert this fair value gap. So when we move to a 1 minute chart, we would then be look to take our chasers from here to the internal high, but also to our pre-made target up here. And what you'll see is here is price just rocketed off. Okay, so it doesn't mean that you're always going to get these setups. What it means is if you've got conviction, you can understand where the draw and liquidity is. It will always give us a form of opportunity, right? You know, there's some systems, for example, we've built where you're looking at 5 minute entry criteria. Now, with 5 minute entry criteria, you're delivering from this bullish fair value gap, but you don't invert a bearish one here. Now, from this one, and unfortunately, it's a little bit messy, but you can get that with crypto. It doesn't quite draw down deep enough. If we'd been delivering from this and then we'd entered here, once we closed above that, I'd be happy to market enter there, right? Stops below there, and then ultimately chase it up for the highs. We didn't get that this morning, but what we did understand is where price is drawing towards. So now these have been taken out. This level here for me becomes really key. Let me just clean that up a little bit. Because again, what we want to see is we want to see how price moves above it. So remember again, when we had this, right, I wouldn't have had enough conviction here that price is moving for this high, right? I'm looking for a nice, clear and obvious target, which I've got there. Now, however, when price has that strong close above here, right, and we still haven't taken that out, it allows me to go into this candle and say, okay, do we draw down into anything bullish? We do. There's our bullish fair value gap. We draw back into here, and all of a sudden, we can see we get our sweep of the low. Here's our lovely high that we break above, giving us our breaker line. Long entry here because we closed above it, stops below the swing low. Pre-made target one in this beautiful clean high here. But ultimately we know, look, that's what we're chasing towards, right? That's how you can get these really nice risk to reward setups. It's not something that we automatically target. We don't go out every day looking for 4, 5, 10x trades. It's not realistic, right? But what we're doing is we're looking to trade this to at least here, this internal high. We can mitigate our risk. We're at 1.73, allows us to book some profits, step away, and ultimately remain effective. So when I'm looking at ARB today, let's just clear all this up. Right, I'm conscious that on a higher time frame, we're delivering from this bearish fair value gap. Yeah, that means that I then need confluence on a lower time frame to tell me that price is going to draw towards this low. All right, I can then move down to say a 4 hour, and I'm saying, is there anything clear and obvious? We're not delivering from any bullish fair value gap here to make me bullish. Yeah, we haven't violated any bearish fair value gap here, right? So that doesn't make me think that we're drawing back towards this. So there's nothing clear and obvious. So I move down to my next time frame, which is the hourly. And what we can see here is, okay, well, where's price currently delivering from? Nowhere really. Yes, we've taken these kind of internal highs here. So if I want my bearish bias, I don't want it, but if my bearish bias is correct, what we would need to do is this. I'd need to see price close below this. Yeah. Then I would look for pullbacks within the New York session. I would look to trade it to that liquidity lower down. All right. However, if that remains and we don't get that, this remains a bullish fair value gap, then what this does is gives me the opportunity on a low time frame to watch price draw into this. And then ultimately, you can see this nice clean high up here. I'm not saying we get all the way there. We would look for, you know, that intermediate term higher here, for example, would be a target that we could look to move our stops up. But at the same time, what I'm doing is I'm not just kind of imposing my will on the market. I'm saying, okay, well, on a high time frame, where do I think price is reaching for? And on a low time frame, I'm trying to find a way to refine that and find key areas where price does react, okay? Because when you're looking at price action like this, just let's look at this just as an example, right? We're just delivering bearish here, right? Lower lows, lower highs. What happens up here? Well, simply, we break our structure. What do we get at the top of that? We get a fair value gap inversion. Our expectation was for price to hold here. It didn't. It closed below. So where did it head for next? The clear and obvious liquidity resting lower. What happened when it got to that liquidity? Look at the displacement. Price just smashed through it. It didn't show like a little wick down and then a big reaction up. So we retain our bearish bias, and then we look for shorts from the bearish fair value gap in here. Yeah. Price then comes back down. Now, the same principle applies. When we're down here, we see that price is just going lower and lower. So when we have this bearish fair value gap here, yeah, and I'm trading this here in London, I'm looking for shorts, probably would have got a scalp short out of that, or maybe I would have got stopped out, right? Ultimately, when price then closes above it here, making this an inverted fair value gap, like we got at the top of the move here, it's showing me that the bears have lost strength here and we've got a big bullish close above. So then I can start targeting liquidity that's moving higher, which then allows me to formulate my bias. All right. Imran, yeah, do you know what? Let's do a couple of minutes. Well, we've got a couple of minutes left in the show. Let's just take a quick look at Sol, because a couple of other people asked for it as well, but that is the last one that we'll cover now. Let's do a very quick top down on Sol. Where's our old friend? Here we go. So again, look, previous play that we took on here, because it's still charted, we had the conviction here that our high time frame level was resting here. It allowed us to take that. We had strong displacement above it. We found support here. Craigie boy, goodbye, mate. Thank you as always for tuning in, my friend. Appreciate you. But then when we climbed back in, showed the weakness. This is the fair value gap then that has kind of been causing the trouble, if you like, bearish fair value gap, which has been suppressing price here and once again here. So let's just clean this up for a second and say, okay, well, where are we right now? So price has done a couple of things of interest here, what I like on Sol, and I like this a lot. We've got a bullish fair value gap that's formed below us here on the 4 hour, and we've just inverted this bearish fair value gap here, showing strength. I'd like to have seen it delivering from a bullish fair value gap here, but it doesn't have to. My conviction on Sol is that it's going to pull down to here before moving for higher prices. Purely just by looking at the 4 hour, that's my thought process, okay? Now, we've set this fair value gap. We don't know price is necessarily going to retrace to there. But often what you will see in any of these moves is that that price will respect these. So if you've got a clear and obvious setup on a 4 hour, sometimes you don't really want to kind of push it lower and lower and lower. You want to find the most clean and obvious one, yeah? So for me, that's still really nice. And also, if we look at the hourly, our hourly fair value gap here overlays this one really well, yeah? And then if we look to our previous day here, so if we're looking at Sunday, we've got Sunday's higher, which we obviously label up as our prior day. So our prior day's higher. All right. And then we've also got this kind of quite prominent higher sat here. So what I'd really like to see today is if we step into our New York session, which kicks off in about 29 minutes, I'd like to see price work its way back down here. Yeah. Find support in here and then find one of our bullish setups, which is we want to see a low swept, a nice strong recovery. Yeah, so price comes in, sweep a low. Oh, in this. So price comes in, sweeps a low here, inducing liquidity, breaks the high here. We can use that as our breaker line. Yeah, meaning that when price closes above it here, our entry goes on here. When we interact with that, we know where we're wrong, our invalidation is there, and then we have a nice target set up there. This setup here, we would look to execute on a lower time frame, right? So we would look at something like, say, for example, a 5 minute. Just to give you a quick example of how we would look at that, just want to show you this one here. I know this happened in Asia. It doesn't mean you can't trade Asia. Perfectly good trading session. So same thing, green box, higher time frame. What happened? Price came back down, yeah, respected this, and then we get our bullish reaction. So within here, this is where we're looking for our long setups, right? Price comes down, but we don't break above this high with any conviction, yeah? There's no displacement here, right? So we don't get the entry. What we do get here is we get price sweeps a low. Here's our high. We do get a break above it. See how we get that close above? Plenty of conviction there. So our order goes on there. Our stop loss below the prior swing low, which is also an intermediate term low. We can use this here, which is just over 1R to move our stop loss to entry. But ultimately, we know we're chasing down higher targets, which we've made from our high time frame, which would be over there, right? This kind of setup here is what we'll be looking for in the New York session when price engages with this. However, if price does this, right, comes down and closes below it, bearish, and forgive the little banana squiggle at the end, I'll do that again. Price does that, then the expectation is for weakness, and I'd then be looking for short triggers down to this low, right, which is just the prior swing low. All right, guys. Look, I hope that's been helpful for you. Apologies if there are any questions on that I didn't get around to. Got a really, really busy day heading off. I'm heading off on a couple of days leave to visit Jersey, actually, for anybody that's from that neck of the woods or knows anyone over there. Just going to take a few days with some family. And yeah, going to be back with you all next week. For those of you that don't know, I'll be live on Monday and Wednesday, which is always free for everybody. We focus on education on those streams. For members of the Nest, the Bird Nest, you can find out how to join in the description below. We'll be back to our live trading sessions then as well. 3.4 up from the previous week. Okay, I know we had pretty choppy week last week. Actually, we had a really kind of slightly dull session, but it was really, really cool to hang on. And it does go to show you that, you know, if you keep that conviction, then we can get those day trades. So we're going to keep that up as well. Thank you so much, everyone. Been so many of you on the stream as always. Really, really appreciate every one of you. Hope that you've, I hope it's been interesting for you. You know, like I say, I just do this to try and give a little something back. And hopefully, if this is something that you guys consider as your future, it's something that you really want to kind of push forward for, then really do consider joining a really good community. You know, I'm part of the Bird Nest, so I'm obviously going to be biased and say that. But find good people that can support you, good networks of people, proven traders, proven track record. And I'm living proof if you invest in yourself enough, you can really, really make some big, big returns, right? I didn't come from a finance background or anything like that. I'm completely self-taught. If you work hard enough, you can achieve a lot, but make sure that you're consistent, all right? And don't lie to yourself. Put in the hard yards when other people won't. So that's me being preachy for the day. I'll miss you guys all on Wednesday, all right? But please do tune in because a lot of our other legends, like Jimmy, your NLP coach, for example, Razoon, others are going to be doing live shows as well. And obviously the one and only Crypto Bird. Do reach out. Have a fantastic week. Be aware of Red Folder News as well. And I look forward to seeing you all around the Nest next week.